Most traders don't lose because they can't identify the trend. They lose because they enter at the wrong time. They buy after a breakout just as the market pulls back, or they jump in too early before the trend is ready to continue. But if you had a way to identify not only the trend, but also the areas where high probability pullbacks are most likely to happen. In this video, I show you how to combine Kalman Trend Levels indicator with the RSI to build a simple strategy. You'll learn how to follow the trend, avoid chasing price, and time your entries with much more confidence. And make sure you stay until the end because I have prepared a short quiz to test whether you really understood the strategy. So let's get started. Before we begin today's lesson, let's reveal the answer to the quiz from the last video. The question was, which of these indicators measures volatility? The correct answer is C, ATR. ATR measures market volatility. When the ATR is falling, the market is becoming quieter and volatility is decreasing. When it starts rising again after a period of compression, it often signals that volatility is returning and a breakout may be approaching. If you got it right, congratulations! Now let's jump into today's lesson. What is Kalman Trend Levels indicator? First, let's add the indicator to the chart. Open TradingView, click Indicators, search for Kalman Trend Levels by BigBeluga and add it to your chart. At first glance, you'll notice two Kalman lines. They may look very similar, so let's make them easier to distinguish. Open the indicator settings, go to the tab, increase the thickness of the long Kalman line, and click OK. Now it's much easier to tell them apart. The thicker line is the slow Kalman, while the thinner line is the fast Kalman. The fast Kalman reacts quickly to price changes, making it more sensitive to short-term market movements. The slow Kalman responds more gradually, helping us identify the overall direction of the trend while filtering out much of the market noise. As these two lines interact, the indicator automatically creates dynamic trend levels. Unlike traditional support and resistance, these levels don't stay fixed. They move with a trend, adjusting as new price data comes in. During an uptrend, they often act as dynamic support where buyers may step back into the market. During a downtrend, they often act as dynamic resistance where sellers may become inactive again. So instead of drawing support and resistance manually, the indicator updates these important levels for you as the market evolves. Now that we understand the different parts of the indicator, the next step is learning how to read its signals correctly. How to read signals. The first signal confirms the relationship between the two Kalman lines. When the fast Kalman crosses above the slow Kalman, it suggests that bullish momentum is increasing and buyers may be taking control of the market. On the other hand, when the fast Kalman crosses below the slow Kalman, it suggests that bearish momentum is increasing and sellers may be gaining the advantage. But don't stop there. The crossover tells us that momentum may be changing, but the dynamic trend levels tell us where price is likely to react. Watch how price behaves around these levels. During an uptrend, price often pulls back toward a dynamic level before continuing higher. During a downtrend, price may rally back to a dynamic level before moving lower again. Instead of chasing a strong move, these levels help us wait for a potential continuation area. Now you might be thinking, can I simply trade every crossover? The answer is not always. During a strong trending market, these signals can work very well. But when the market starts moving sideways, the fast and slow Kalman lines may cross back and forth several times, creating false signals and unnecessary trades. So, while the Kalman trend levels do an excellent job of identifying the trend and highlighting potential reaction areas, they still need one more piece of confirmation before we can build a complete trading strategy. That's exactly what we will add in the next step. Adding the RSI. Now let's add the second part of our strategy, the Relative Strength Index or RSI. Click Indicators again, search for RSI and add it to your chart. Now open the Indicators settings. Leave the RSI length at 14. Next, go to the Inputs tab, change the upper band to 50 and uncheck the other options since we don't need them for this strategy. We'll use the 50 level as our momentum filter. Above 50, buyers have the advantage. Below 50, sellers have the advantage. So why do we need the RSI if the Kalman trend levels already show us the trend? Because the two indicators has different jobs. The Kalman Trend Levels tell us where we should be looking. They identify the direction of the trend and highlight the area where price is likely to react. The RSI tells us whether momentum is supporting that move. Think of it this way. Imagine you are driving on a highway. The Kalman Trend Levels are like your GPS. They show you the correct road to follow, but knowing the road isn't enough. You also need to know whether your car has enough power to keep moving forward. That's the RSI. It measures momentum. It tells us whether buyers or sellers have enough strength to continue the move after a pullback. Instead of taking every Kalman signal, we only enter trades when both the trend and the momentum agree. Now that both indicators are on the chart, we're finally ready to build a complete strategy with clear buy and sell rules. The complete trading strategy. Now let's put everything together. Let's begin with a buy setup. First, the fast Kalman should be above the slow Kalman, showing that buyers are in control. Price should also remain above the dynamic trend levels, confirming that the overall trend is still bullish. Now be patient. Don't buy after a large bullish candle. Wait for price to pull back toward one of the dynamic trend levels. This gives you a better entry and reduces the chance of chasing the market. As price begins to move away from the dynamic trend level, watch the RSI. If it crosses back above the 50 level, it confirms that bullish momentum is returning and the pullback may be over. Once the confirmation candle closes, the buy setup is complete. Now let's look at a sell setup. The first Kalman should be below the slow Kalman and price should stay below the dynamic trend levels. This tells us that sellers are controlling the market. Next, wait for price to rally back toward a dynamic trend level. Don't sell immediately after a large bearish candle. Let the market come back to you. As price starts to move away from the dynamic trend level, watch the RSI. A move back below the 50 level confirms that bearish momentum is returning, completing the sell setup. After the confirmation candle closes, the sell setup is complete. Notice what we are doing differently from many beginners. We are not buying every bullish crossover. We are not selling every bearish crossover. We are definitely not chasing price after a breakout. Instead, we are waiting for three things to agree: the trend, the pullback, and the momentum. When all three line up, the probability of a high-quality trade becomes much higher. One last thing, even the best setup can lose. That's why every trade should have a stop loss and a clear take profit target. Risk management is what keeps you in the game. Before we wrap up, let's see how much you have learned with a quick quiz. Which condition creates a valid buy setup in this strategy? A. Price is below the Kalman trend levels and the RSI is below 50. B. Price is above the Kalman trend levels, pulls back to a dynamic trend level, and the RSI moves back above 50. C. Buy every time price touches a trend level. D. Buy whenever the RSI reaches 70. Type A, B, C, or D in the comments. I will reveal the correct answer in the first 30 seconds of my next video, so don't miss it. If you enjoyed this lesson, open the chart and test this strategy on different markets. The more you practice, the easier it becomes to recognize high probability setups. Thanks for watching and I see you in the next video.